Hey, welcome back to the Foundation for Greatness. My name is Joshua Lafon.
Zala Gonzalez.
And then today we have Ivory, which is a lender. She's gonna go over, we're gonna ask her questions that a lot of you viewers are asking us and bringing up questions to us, either if we're out in the field or here on social media. We're happy to have her here today. So thank you for coming.
Yeah,
Thank
of
you,
course.
Ivory, yeah.
I'm very excited to be here. Thank you.
So tell us a little bit about yourself, like where you came from and why you want to be a mortgage and all that stuff.
Yeah, so I'm originally from California. I want to say that I've relocated from Las Vegas like maybe 6 to 7 years now.
Oh, okay.
And yeah, kind of like the same thing, you know, like just every typical Californian, like California's expensive, you want to buy a house. So you move out to Vegas, and that was actually the motive, you know, for why I came out here. And I did mortgage out there, and then I obviously did the same thing out here. I did see a big field for loan originators. You know, I feel like there is a little bit of a lack of knowledge just in general for finances and purchasing homes and all that stuff. So it's definitely like a very exciting field to be in. You're helping people ultimately make the biggest purchase of their life. And yeah, it's lots of fun. It's a lot of numbers and stuff, but it's really fun educating people on, you know, I mean, at the end of the day, you know, real estate is a big asset, and I love to be able to be a part of that when I work with clients.
Yeah, that's awesome.
That's awesome. Yeah.
So let's get into it. So so I have a lot of clients that ask me like, am I able to flip a house with like an FHA loan or a conventional loan or with my VA loan? Like I've already, I'll just start with FHA because I have a lot of clients that do that. They're like, hey, with an FHA loan, if I put down 3.5%, this property is in bad condition, but I could go and put like 15, 20,000 into it, and then I could put it right back on the market, right? And I'm like, no. And then sometimes they don't believe me because I am the realtor.
Yeah.
So, I'm like, okay, yeah, talk to the mortgage person. Sometimes the mortgage person can't really explain it in detail. It's like, they don't want to upset somebody. So is someone able to do that?
Yeah, so FHA and VA are obviously have to be primary residents. You have to be occupying the property to be eligible for them, because obviously it's the government, and they are financing this for the purpose of helping a buyer. Like, this is your home, this is what you're going to be occupying. So this is why those programs are out there, right? So no, you can't go and flip an FHA or VA loan. However, there are things that you could do, like have a multiplex, right? So you could buy a multiplex, which as long as you're occupying one of the units, you can rent them out. And you can do that as an investment. But as far as flip, you would ultimately have to like occupy the property, I believe, for 6 months, and then you would have to sell it, and you can't just have it as an investment. Now, if they're already, you mentioned something about like they're already trying to put 15, 10, 20% down. I mean, you can do conventional. If they're already putting that monies down, then you might as well do it the right way and do the conventional, which is the minimum investment is 20% down on conventional.
And how long do you have to hold that property in order for, like on a normal conventional loan, how long do you have to hold it in order to technically flip it?
You mean as a primary, or?
I guess if they want to do a primary and just flip a primary, because I know that you're not supposed to do that at all.
Right.
You have to do like more of a secondary.
Yeah.
So more of an investment loan, I guess.
Yeah. So if you do an FHA loan, right? Let's say I buy a house and it's FHA, right? Mm-hmm. How long do I have to stay in the house for? So that I don't get penalized by the government since they're helping me out.
Yeah, so it's about 6 months you want to be occupying the property.
Okay,
yeah.
And that's at 3.5%?
Yeah, that's the minimum, yep.
Okay, but if I had, let's say, $20,000, right? Mm-hmm. And I was going to use it to flip the house, I can also put that towards a loan just to be more, if I didn't want to wait the 6 months, right?
Yeah.
Like if I had the down payment, 20% down.
I mean, there's no way
no penalty, right?
There's no way that FHA really verifies occupancy. We just know that if there are occupancy violations, then yeah, you can get a fine, and sometimes you have to like have the loan, repaid completely at that moment.
Because it accelerates.
Okay, yeah.
Right, yeah. But if your intention is that, okay, like I have this as my primary, I'm an FHA and I want to try to flip it, yeah, you definitely want to do that within, you have to wait at least 6 months. That's the like occupancy like guideline.
Okay.
And try to do it that way.
So are there better loans to do, I guess, a flip with when it comes to something like that, so that way you don't get penalized with like, it's like, oh, this only needs paint and carpet, and I want to put it back on in 30, 60 days. Is there better loans to do that?
Yeah, so I mean, obviously, well, yeah, with conventional you have to hold also, for a minute, but there's also programs that are called the hard money, and it's funny because sometimes when they hear that word they think, oh my god, but it's actually a very seamless and I would say like very good process even for investors, right? So most people that are doing these things are self-employed, they don't have, sometimes they don't have like the best tax returns to evidence. Oh my god, losses, all this stuff. Bank statements too can get sometimes messy. Even with bank statement loan programs, we're auditing and we're reviewing like deposits, withdrawals and stuff like that. So the way the hard money is kind of like, that phrase, show me the money, right? So as long as you have like the 20% down, it's, you have your 2 months bank statements to show that you have the assets to put the money down. Credit is obviously, I think it's 720 would be like the minimum FICO to be able to apply for this loan program.
Okay.
And yeah, like, I mean, it's dependent on, we don't need income. We just need the money, your credit, and, you can close as fast as like 10 or 15 days,
Nice.
And with hard money, we have 2 different loan programs. So there is the interest only, which is 12 months. It's called a bridge. No prepayment penalty. So let's say you got into contract now, you want to flip it in 3 months, you can pay it off and there's no penalty. That's the 12-month bridge. We have one called the 5-1 arm, which is, there is a 5-year term. It's interest only, so the payment's a lot less. It's not like a traditional mortgage with principal, interest, taxes, and insurance.
Is it better for rentals, the 5-year arm?
5-1 arm, because it's a 5-year term and there is a prepayment penalty for up to the 3rd year, but it's more for an investor that's like, I don't know what I want to do with the property. Like, I want to see if the cash flow is there, like I'm making money off of it, or maybe I'm gonna, ultimately at the end of the 5 years, you can always refinance it as an investment, or you can refinance it to like a regular loan program.
That's good. Yeah.
Conventional loan. Yeah.
And
So
let me ask you this, back to the FHA, because I know you said you could do multifamily. So I know that there's 2 separate types of ways you could do FHA with multifamilies. Are you how do I want to say it? Are you familiar with doing FHA on like 5 units or more?
yeah. So I mean, with FHA it would be up to 4 units.
Gotcha. Because I know
Yeah.
I know it's more of a commercial loan
Yeah.
after
Right.
4.
Yeah.
So yeah.
Yeah, because even with hard money, they do only finance up to 4 units as well.
Oh.
At least with
Okay.
with
With your
us.
company.
Gotcha.
Yeah.
So more
Okay.
residential.
That's what I was going to ask. The FHA, what's the limit, right?
Yeah,
Is there a
so-
limit to how much you can buy with FHA?
Well, yeah, they're still restricting on the the loan limit. So I believe now with FHA, I believe it went up to 5 or 4. I'll have to check back with conventional. Now
Yeah.
they're up to,
500?
like,
It's
yeah,
like
with
424 something like
Yeah,
that.
so
Oh,
we're in the
okay.
400s range, and then with
Yeah.
conventional, it's gone up now to like 640,000 loan limit. So you're still restricting on like
Got
what the
it.
loan limits
Okay.
are for
Gotcha.
FHA.
Are the loan limits different from a single family to like a 4 unit?
Yes, it varies. Yeah, so there's single family, and then there's like the multi-unit. I forget what's the other one, but yeah, I mean it's not that much of a difference. Like it's.
I thought like a
almost-
significant amount. Like what? I could go get that with FHA.
Yeah, I don't know off the top of my head, but yeah, it's
Go get
very
it right now.
Aplex. Hey, 3.5% for an Aplex.
Oh
right.
man.
Yeah.
That would be great. I mean, I'll buy 3.
I mean, yeah. So, but yeah, like there's multiplex is definitely a lot of investors are like, let me do the FHA, let me occupy the first, and try to rent out the other ones. That's a pretty good strategy, and I think the hard money too. It's very easy to just be like, hey, I have the money, let's close on this, and if I want to flip it in 6 months, or if I want to do it, kind of hold it to the 5 years and kind of see what the cash flow is with it, then I think that's a very beneficial loan program as well.
That makes sense.
So if I walked into your building, right,
Mm-hmm.
what do I need to bring to get pre-qualified on the first day, if possible?
Okay, for
how-
any type of loan program, right?
No, let's say I'm a first-time home buyer, right?
Okay.
Let's say I'm going with an FHA because that's that's the easiest one to get, or that's what people think is the easiest one to get. So I'm an FHA buyer. What do I need to bring?
Okay, well, obviously your ID, because we run credit and we want to make sure, obviously, like your information is correct.
Okay.
Depending if you're W-2 or self-employed. So with W-2, you need 30-day pay stubs. That's how I determine what is your pay range. What is the year-to-date earnings that you've made up to that day.
Okay.
If you were self-employed or even W-2, you do the 2 years tax returns, because that's pretty much what you use to file is whether you're scheduled Schedule C or you'd have K1s, 1165s, whatever.
Okay.
And then we do 2 months bank statements because we want to know. Sometimes you don't have all the funds in there, right? Especially as a first-time home buyer, but that gives us like a heads up, like, okay, what do we have to work with? How do we strategize for this borrower to maybe not be prepared right away, but be prepared in like 2 to 3 months, you know? So yeah, basically you want to do pay stubs, W-2s, tax returns if you're self-employed, 2 months bank statements, and ID is pretty much what I would say are
the basics.
The basics, yeah. Okay, sounds good. Yeah. So, and it goes for conventional as well, right?
Yeah, because we're gonna qualify the same way.
Gotcha.
Very
Yeah.
cool.
Now, if we did the hard money, it's a lot simpler. It's just where's your credit at. I mean, even if you had debt, it doesn't matter, right? Because it's like we just want to know where's your credit score. Do you have the monies? And basically, with hard money, it's like what we used to qualify you is what's the income that you're expected to have in the property, which. Right now with market rents, it's like obviously there's never. I mean, for right now, it hasn't been an issue where it's like, okay, this property rents are like down here and your payments up here, right? So.
And then with the hard money, like at the 1 year bridge, how long? Like if you have like okay credit, I'd say like 620 to 660.
Yeah.
But you have experience. Does that play a factor or?
Well, it would play a factor with your rate, but yeah, I mean, because you're taking. I mean, obviously you got to think as a lender, right? You're taking more risk. Like I don't have to see your income. I don't have to see what debt you had. I don't even have to look at what properties you own. I just need the monies, and for the most part, that's why the terms and the rates are a little bit higher. It's because of that. So yeah, like it doesn't factor in because of, and then they also think of the risk, right? Like we want you to at least be a 720 because it's like we're risking not having to provide all these other assets. So you just gotta waive it out,
That makes sense. Okay.
Yeah.
And what does the loan to value have to be for hard money?
So minimum is 20%. The only time that I've seen that it's gone, so for skyrise, and that's very popular here in Vegas at the Strip. We have a lot of the condo rises.
Yeah.
Those are
people actually get hard money for those?
Yeah. So
really?
those are 60.
Oh, because some of them are cash only.
Oh yeah.
So those are
that.
60% LTV, and there's also again more risk because. With condos, there's always litigations, right? Like sometimes there's structural.
Some of them
always headaches.
Yeah. I mean, sometimes
condo certs.
Yeah, exactly. So there's a lot more risk with the sky rises, and this is why they put the LTV. Yeah, so it's 40%. For the condo.
20.
No, 40.
So 20. Yeah.
40.
Yeah, 40% for Skyrise. Yeah, but any other project, like whether it's multi or single family, they do the 20%. Yeah, so it's like investment.
Gotcha. And then with the, I'm curious about this. So with the 5-1 ARM, are you able to get that one in? Like if I own land and I want to build, let's say a fourplex on that land, am I like, do I have any type of leverage or do I have to still get is there a construction loan that I could get based on that, or like how can I?
Well, to be honest, at least with my mortgage company, it's all residential. Yeah, so it has to be, we are financing on an actual property or an actual structure.
Oh, okay.
So not for land.
Right.
Okay.
Well, no, like if I own the land and like I want to build something on the land to get the loan for that.
I mean, it would still be considered. I guess it would be like a construction loan.
Okay,
yeah. So yeah, unfortunately, it would be all structures that are already built and in place.
Gotcha.
Cool.
Okay.
Right.
Awesome.
Just curious.
So a lot of people always come to us and always ask, do I qualify for down payment assistance?
Yeah.
What are the pros and cons of that?
So I'm actually seeing a trend in, I don't know if I speak for myself or other lenders, but I do see a trend in decline with down payment assistance programs. Why? Because borrowers are becoming more savvy. There's TikToks now that are being made by mortgage loan officers and even podcasts like this.
What is doing?
Yeah.
I know I'm dancing from the camera.
Oh, that's awesome.
No, I'm
I'll
not.
have to follow this. Yeah, but borrowers are becoming more sophisticated as the years go by, and they're becoming more knowledgeable, and they realize free money isn't really free money, right? So what do I mean by that is that like ultimately that money that they're giving you for the down payment assistance, you have to pay it back. So let's say that if you qualify for, I don't know, let's say like a 3.5% purchase loan rate, then with the down payment assistance you would go up to sometimes even a point, so you could have like a 4.5. Why? Because you have to pay that back to
so your
the
payment goes up quite a bit,
because
right?
you're still paying us as a lender, and you're also paying whatever institution or.
Wow. Okay. So it's like a double.
And is there a way to get out of, like, if you purchase a property and 6 months down the road, you're like, oh, I want a lower rate. Are you able to refinance it, or is there a period that you have to wait, or how does that even work?
Yeah, so that's another point that I was going to bring up. Because you have to wait until you pay back this monies, you have to actually, well, here in Nevada we have the Home is Possible loan program, so that's 2 years. You have to be in your home for 2 years because they want to be able to get that money back. Now, after the 2 years, or even before that, like if there happens to be a market change where you can get a really good rate, you can't get it now because you have to wait until that 2-year term is done. The other third thing that I wanted to bring up with down payment assistance is so we lenders use something called a Dti Loan Calculation. I don't want to get too complex, but how we calculate your income based on your debt, right? So conventional, usually minimum is 45%. Now, if you do Home is Possible, they have their own rules. They'll have a lower, DTI that they qualify for. So let's say you were able to get a $300,000 home. Now you only qualify for $250,000 because now whatever debt that your income that you were having, they're only going to qualify a certain percentage. So but I do see like a little bit of a decline with down payment assistance. People are just like, you know what, if I can get a better rate and get the monies or just save up, then they always, people just, at the end of the day, this is all like finance smarts, right? Like you try to think like, what am I really saving in the long run? Gift now is so easy to get, who doesn't have a mom, a dad, an uncle, or even sometimes your employers can grant you.
Or me.
Your employers can grant you?
All of you,
I didn't know your employers can grant you.
Yeah, or even agents sometimes, like I know sometimes you guys assist with, things like that. But there's so many ways now to be able to just come up with the money, and even like I said, I work with borrowers that like, you wait 2 to 3 months on assets and just kind of wait them to save up, and they'd rather do that than have to, qualify for this really high payment, but they didn't even get the house that they really wanted because now they have to downsize or the sales price that they would qualify for.
So. And the average house right now is like $300,000 for a 1,100 square foot house.
Yeah,
so
exactly.
you can,
so.
400,000 is the new 300,000.
No, definitely it is.
Yeah, so that's a big difference. So you mentioned that employers can give you the money for the down payment. Yeah. How does that work?
Yeah, so gift is, you can use a relative. That's actually, you can't use from a friend. So it's good that we're mentioning what kind of gifts you can actually get. So relative is one of them. The employer, which is actually how I got my first home, was like through my employer. Yeah, fortunately I worked with a really good mortgage company that was able to assist me with that.
That's awesome.
Even lenders sometimes, or agents, you guys are able to credit, or when we do seller credits and stuff like that.
And what do you mean by employer? So if someone works at a casino, do they just ask how does that work?
Yeah, so obviously you would have to document this properly, that it's non-repayable, right? Because anytime that you're getting a loan, kind of
so more like a bonus.
Some kind of going back to here in Las Vegas, the culinary is a very popular.
Oh, okay.
Yeah,
but that's also something that you have to pay back, right? So it depends on what. Yeah, it would have to be from an employer that clearly stipulates this is a gift. It's not repayable because you don't want to take out a loan to get another loan. You know what I mean?
Yeah. I guess what employer will do that though as a gift?
It just depends.
Because you don't have to pay it back, right?
Yeah. So personally, I've seen IT companies where they will sponsor people from other countries to come to our to our country, and and if they're able to say, hey, you're trying to get a loan, and they have a particular program where they're like, we're issuing gifts or grants to our employees. That's one. I particularly, like I said, I worked for a really good mortgage company 5 years ago that was able to provide me with that as well. So that is an option. But it's obviously very limited employers offer that.
Yeah. You almost had me there because I was about to call my clients from casinos. Hey, ask your boss to borrow some money.
Oh, right. Yeah, every employer offers. Some don't, but
that makes sense.
This is really good to know though, because I do have a lot of clients and friends that work in the casinos, and if it's legal and possible to do, that's a great way to get that house now instead of waiting for the interest to go higher.
For the people that work in the casinos, they have something called the culinary program, but I believe that's also
the one where you have to pay back, because I have a couple clients that they can't do anything with the house for 2 years.
Oh, okay.
Yeah, so that's why this one it's more.
And I know that there's programs out there for cops, firefighters, like the not public safety, but or
First
maybe
responders.
First responders. There you go.
Okay. So there's actually a program with Nevada Housing Partners that have for teachers, for police officers. I actually haven't personally done one yet for them. I don't know if it would be similar to Home is Possible where it's repaid.
Yeah.
But yeah, I know that Nevada Housing for sure has a program.
Yeah, because I've helped. I almost was able to help a teacher get into that program, but the interest rate was crazy, and it's a part of like what is it? The Home is Possible like outlet.
Okay.
And they have to like jump through so many hoops, and then they can only purchase with like certain zip codes, and
that's
Okay.
right.
it's crazy. I'm just like, and then I had a lot of my buyers just like, no, actually, let me just do it traditionally. I'm like, okay.
Yeah, I was gonna say the only ones I've heard of is with Nevada Housing, the ones that does Home is Possible, and I mean I'm assuming that if Home is Possible is that way, then that's probably how it is for
Makes sense.
teachers and police officers as well. Yeah.
Okay.
But I mean, yeah, if people are able to come up with the funds, and I always tell first-time home buyers, like, don't be unmotivated. Like, 99.9% of the first-time home buyers, when they apply, you're not going to have your credit in line. You're not going to have your assets. You're even maybe not even have your employment online. Because, I mean, how many of us even switch sometimes, companies for a better opportunity? But, the first thing to do is obviously talk to a lender. And I mean, I'm one of those people that, everyone is free to call and if they have questions, and I always try to motivate them. Like, not everyone has the perfect credit. We try to so with credit I have something called a what if simulator. So let's say the credit was at 580, which is the minimum for FHA, but the higher you always get. Yeah, for FHA is 580, but obviously the higher you get, better interest rate, better terms, right? So if somebody comes to me right now has a 580 and I say, hey, let's try to raise it to at least a 600 or something that can, help you out a little bit, then that's something that I help with them is with credit. And sometimes, not everybody's going to come and have all the answers. Same thing with employment. Sometimes they're like, oh, I took a year off, or like COVID and all that stuff. And I'm like, don't be discouraged. Like, let's wait. You know what I mean?
Very true. And then back to the credit, do you guys do rapid rescores?
Yeah, that's kind of like so the what if simulator is like, hey, if you pay down this much, how much would my credit rise? And it's an accurate thing. Like, I'm not like, let's pay off all this debt and see if it goes up.
What if?
Yeah, you definitely don't want to do that to a client.
So how fast does like a rapid rescore the credit? Is it like a couple weeks or? So
there's it is quite a process. So let's say right now I tell someone, hey, like, pay $2,000 off of this card that you have, and this is gonna raise it like 10 points. They have to pay it off, right? They have to get actual proof from like the trade line or the account holder that it's paid off in zero, which is an actual letter. We use that to submit it to the the verifier that we use. And I mean, it can go as far as 5 days, but I wouldn't say anything crazy. Fast, and then we can go ahead and get them where they need to be.
Okay.
Yeah.
Cool.
Yeah. That's awesome.
Yeah, because I know I used it for a few of my clients with my lender, and it was like, oh, it's like you're 30 points off, but if you just pay this and this down, and they did the rapid rescore like within a week and a half.
Yeah.
This was during the process of buying, and bam, and it was already done, and I'm like, oh wow, that's awesome. Then they got the rate was better, which lowered their payment, all that. So I was, it's amazing.
So definitely first-time home buyers, you really have to just be patient and hold their hands through all. I mean, there's so many things that go through a loan. It's like I said, the money, the employment, the credit, and I'm that's why I like what I do. Is you're just helping people kind of be financially smart with not just being able to qualify for a loan, but I mean, credit applies to everything, right? Having assets and all these things, and your employment. So all of these things are going to contribute to financial success, and that's part of what I do, and it's
that's
really
the foundation for greatness right there.
Exactly. There we go. Yeah.
Right?
All right, sounds good. So I know that you have to leave us here soon.
Okay.
So if you want, you can let the viewers know like your number, and then we'll also have it on our Instagram, and then we'll also have it on the YouTube, so that way that way you can have their number, your email, and then your if you have a URL like the website.
Okay.
We'll put it on there as well.
Sounds good. My name is Ivory Sandoval, loan originator here in Las Vegas. I'm also licensed in California, and I would love to help you get into purchasing a home, whether it's your primary, your investment. If you already own a home and are interested in looking at rates for refinancing, possibly cashing out some of that equity that you have in your home. Again, my name is Ivory, and my number is 916-640-9362. Thank you, guys.
That's awesome.
Yeah, no problem. Thank you for coming on.
That's such a short notice.
Yes.
Yeah, of course.
That's awesome. So, guys, as you guys saw, based on what Ivory said, we have a lot of choices. So you have an FHA loan, which is 3.5% down, The credit score is 580 minimum credit score, which is like super doable.
Oh yeah.
We have a conventional loan as well. With that one, you can do 3% or 5%, depending what your credit is.
Yeah, 3, 5, 10%, 15, 20, all the way up to probably 95. So.
Yeah, exactly. And then we have the hard money one, which that one seems like it's pretty easy to get. You just need your bank statements and have some. You have to have money, but imagine getting 80% of the loan for a property that you're gonna flip or invest in. That's crazy. That's a lot. That's crazy, guys. I mean, 80% of the loan, all you need to come up with is 20%, which is pretty amazing in my opinion.
And with the hard money loan, I've had clients where they needed like a bridge loan for like either short term, or they're like, and these weren't even investors. They're like, hey, I still have this property, you know, I'm in a bad situation, whatever it is with that property, but they're like, I need another property.
Yeah.
And they were only able to qualify for like a bridge loan, so that way they can get that property. And technically it's cash. So if it's cash, then you could go in, you know, purchase that house cash, temporarily, sell the one you have, and then bam, you know, now you have a house, you refi it, all that, but you have to have the money down up front in order to do something like that.
Yeah.
You know, and that's a good option kind of in this market right now, is to possibly utilize the bridge loan. But if you have 20% down already without having to sell your house, purchase a house cash, you know, it's a cash offer, then you refi it right after you sell your other home, easy transition.
Yeah, exactly.
You know,
so lots of options, and if you guys are in the process of purchasing a home and you just have any questions on how to get started, you can reach out to us. We do have a lot of knowledge on the loans as well, but not, you know,
not extensively.
not experts.
Yeah.
But we do have the resources, and I probably bought 5 properties in my lifetime, so
nice.
So I guess I know how to do it, right?
But I would hope as a realtor, right?
I would hope so as a realtor, I know how to do it, right? Anything else that you want to cover, Josh, that you have?
I would say actually, I have a lot of people that are asking about like investments, like, hey, like I want to get my first investment property.
Yeah.
Like, how would I go about it? Where do I start? How much money do I need? You know, who do I talk to? Like, how do I get this started? So, so I wanted to like touch a little bit on that. That way, you know, people can understand a little bit of how to do it, and you know, or some of the people that are like, oh, I want to Airbnb. Like, you know, how do I do that? Like, where do I start?
So, I guess for me, how would you buy your first property if it was an investment property? What would you do? Like for me, I would just.
Well, I always ask the client. So this is like, I always have a consultation with the client. I'm like, hey, look, what's your goals? Because you have to have goals in mind.
Yeah.
Because you can't just say, hey, I want to purchase a rental property.
Yeah.
Awesome. Why?
Yeah.
They're just like,
how much do you want to make on it, right?
Yeah.
How much money do you want to put into it?
Yeah. Like,
what's your exit strategy?
What's your goal?
What is your goal? Yeah.
And you know, majority of the time, most of the people are like, okay, well, my goal is to you know, start with this first one and at least have 5 because I want to make X amount of money per month.
Yeah.
It's like, okay, there's an awesome goal.
Retirement plan.
No, I have this client where exactly that. He's just like, look, I want to retire and I'm going to refinance one of my houses or maybe 2 of them and pull out a good $250,000-$300,000.
Yep.
And he's like, and you know what? I think I might just buy 2 townhouses cash. You know what I told him? I was like, dude, you're crazy. Don't do that. I was like, yeah, you want to retire. But what happens with those 2 townhouses? Like if one person doesn't pay their rent,
right.
You know.
Yeah.
So what I told him, and I told him like this. I'm like, I know I'm a realtor, and I know I'm not doing this as a salesperson.
Yeah.
But this is what I would do. And he's like, well, what would you do? So I told him, I was like, you want to take that $300,000 and say, okay, each property that I want is, you know, $250,000 and under.
Yeah.
Now you take that, we'll say basically $200,000, and we'll say 20%, right? So that's $40,000. So you take that $40,000 and then break it back up into the $300,000 that you have, right?
Yep.
That's how many properties that you can get based off of $200,000.
Yep.
And now you have a portfolio of maybe 5 to 8.
Yeah.
So
that's exactly it. That's the same thing. Like I get clients that want, I got $500,000. I want to get a fourplex cash. Why? You can get 4, but 5.
Yes.
Right? And now with the way things are, you buy one, next year it's worth an extra $50,000. 50,000 times 4 or 5, that's another $250,000.
Well, another thing too is like I like to play devil's advocate where it's like, hey, because everyone always asks, and there's always fear in the market, as in what if the market goes down?
Yeah, right.
Exactly. so my thing is like, look, rent has never gone down, and I've looked at history, and the only time it's gone down was 2008. You know how far it went down?
10%.
10%.
Yeah.
You know what 10%? Like, let's say your property is making $2,000 a month.
Yeah.
10% of
$1,800? No.
Yeah, it's only $200 it goes down.
$200. Yeah, exactly.
Nothing. That's nothing. So
that's crazy.
Yeah. So that's the thing is like that's the way you gotta look at it, and it's like, okay, rent's not gonna go down, and if someone doesn't pay their mortgage, if one of those people don't pay their mortgage, all the other properties compensate for that one until they can pay their mortgage or whatever it is. Yeah. So that's why I always say diversify your portfolio when it comes to doing that, So that's what I would say when doing that. But back to like the person that's like, I want to get my first one. So I would say, figure out your goal. Mm-hmm. And then after you figure out your goal and your end game, then, find a budget that you're comfortable with.
Yep.
And then you want to put down at least 20-25%. And you can actually, if you know a friend, family member that's in a bad situation, you can actually obtain that property and, buy it for a lower price to help them out, to get them out of that bad situation.
Yeah.
That way it's undervalued. Then you can upgrade it a little bit.
Yep.
And then you could refinance it and then do that, or just upgrade a little bit. And now your mortgage is a lot lower. Yeah. And you can rent it for a good amount. And now here in Las Vegas, our market is now a rental market. If you would have asked me, I had clients 3 years ago, they were like, hey, find me a property that's, clears at least $400 or $500 a month. I'm like, funny. That's funny. Now it's like, hey, like, they're out there.
Yeah, they're out there.
Because you could get a mortgage for a house for, $1,300-1,400
with the interest rates, and
then now,
and then crazy.
Rent it out for $2,200-$2,300. Now you got $1,000 extra.
And everybody wins. I like what you said. Like if somebody's like having problems with their mortgage or whatever, not being able to pay it, you buy the property and you help them out. They get out of that situation. So everybody wins, right? Yeah. So,
and that's
you create jobs for the contractors. They're gonna remodel it. So it's just an overall win-win for everybody.
Yeah, very true. And I do that, to this day right now is I help people in bad situations. So some people will have like tax liens that they're like, hey, look, like I had a business, went bad. It's $100,000 tax lien, or just all these different types of issues that happen because life happens. And I like to help those people out, and I will either purchase it because I see it as a good rental or as a good flip. And I'm not purchasing them because these people are in bad situations. I'm actually helping them, and sometimes I'm like, look, the numbers are kind of not there to purchase it at the price you want it. But what I can do is I can purchase it, pay off all the liens. That way you don't have any of those burdens after you're gone, and give you, $5, $10, $15, even $20,000 for those keys, and then give you an extra 30 days to try to move out. People are happy about it because I'm giving them that opportunity to, get the extra money rather than, hey, thanks for the house, see ya.
Well, somebody's going to take it too. Like, if they're not able to make the payments, more than likely the bank is going to take the house anyway. Right?
And the bank's not going to pay you for the keys. They're just like, see ya. They have no feelings.
Yeah.
So, and if anyone's in that bad situation, I would like to,
we'll like to help you.
Yeah, we'll both like to help you. Contact me, contact Zalo. We'll both be able to come together, fix, fix whatever problem you have, and we'll come up with a solution for it. That's what we're here for is, and if we can't buy it, hey, you might even be able to sell it on the market and get a good price, but we have options. We have options.
That's what we have.
Yeah.
Options for everybody.
Yep.
So, I mean,
but that's what I'd say about purchasing your first, rental property and all that.
I think Carlos wants to get one.
Yeah. The cameraman wants to get himself
the camera guy wants to get a fourplex now that we talked about.
Yeah, he's fiending for one.
Yeah. So anyways, thank you so much. If there's anything else that, if you guys have any other questions, we're going to be bringing on a lot of different folks like we talked about for all the greatness that we're going to be bringing.
Yep.
Yeah. I kind of lost my train of thought there. But yes, so we're going to bring you a lot of value. I think next week we're going to be bringing the CPA,
which is a certified personal accountant.
Yeah.
So we're gonna have an accountant.
Yeah.
I know we promised that last week. We had to reschedule, but we're gonna bring you one of those. We're gonna also have someone that does life insurance.
Yeah.
Explain, how life insurance you can take loans out on your own money. Very interesting. And then we're also gonna have a gun shop owner. That owns a gun shop.
For safety,
safety. See why he wanted to start selling guns, which is it's amazing business right now, especially during COVID.
Yeah.
We want to bring on like a DJ. We want to bring on so many different types of business owners. And if you're a business owner yourself, call us or even text us, email us, whatever you have to do. We want to get people on here. We want to see where you started, why you're doing it, and the struggles you went through, because we love to hear about these stories, and so do you guys.
Yeah, exactly.
So I would say, like us, subscribe to us, keep watching, keep listening. We're gonna go from there. You have anything else to say?
No, I just want to say thank you guys for tuning in. It's always fun to have you guys' audience, and we thank you so much.
Yeah, and please keep engaging too, because we love the questions that you guys keep giving us.
Yeah.
And then some of the suggestions you guys have, love it. Thank you.
Thank you.
Yep.